morning guys. We're going to talk about journal today, beginning with J. We're going through an alphabetical order going up to the new year. And so the thing with the journal is something that I advise that you do, and it keeps you basically on top of your trading journey, really. Not journal, but journey. And so you'd identify where things went wrong, what worked, and it gives you an idea to how to improve and what you did, that incurred that loss, and it also gives you like a total and things like that. Now the thing is, for me, I'm very old school and I keep a diary, pen and paper, right? And that just it sits by my computer, and every day I flip over each page. So, but if you don't have a pen and paper, a diary or anything like that, you could just create one on Google Sheets. So what I've got on mine is simply quite simple. It's like what currency pair, the size, that's completely down to you, but you do need to respect your risk to account. So you don't want to be trading larger than 3% of your account size, okay? So that's something that you'll need to go to my FX book calculator, and then you go to here, position size calculator, and then you're going to put in your size of your account, and you don't want to exceed 3%, okay, at any time. You definitely don't really want to go beyond 3%, really. I don't know the size of your account. You might have a $5,000 account, I'm not sure. 40 pips, we don't know what, it's just an arbitrary value. So that's the size of your like the total of your trades, okay? So that's how you calculate the size, and in your long or short, so long or short. This is how I've got my trading diary, and some days I don't fill it in because I don't trade every day, and currently I didn't make any trades yesterday, and I might do some today, I'm not sure. So this is another one. This is quite useful because it tells us how confident you were. But yesterday I had a low confidence. Because of that, there wasn't any trades open. So you can have high, medium, low. Obviously, if you've got a low conviction, do you want to enter? Very rarely do I have a high conviction. I'm normally quite medium. But I'm quite cautious anyway, just as a trader. And then you've got the strategy used. So that can obviously depend on what strategy you're using, obviously. Currently we're looking at the sentiment and the MA crossover in FXCM. So it might be a trade based on that. And also it could be a trade based on the better volumes, or it could be a trade based on whatever strategy you're using currently. I'm quite enjoying the better volumes right now because it gives us a SL and a TP, and it uses like pretty decent logic where we're looking at volumes, net institutional buying and selling. So it's a decent strategy. You combine that at the stop loss clusters, you know where to target. So that's completely up to you what you want to do, and your risk to reward. So this is really, really important because you do definitely want to get like a 2R ideally. 1R is okay, but you need your hit rate to be quite high. A 2R, your hit rate doesn't have to be that high. If you get a 3R, then your hit rate doesn't have to be that great. As long as you're looking for a greater reward to your risk, you don't need a really, really high hit rate. As long as those occasional rewards are great, it's going to nullify your risk. So, for example, in the pound USD, this wasn't a trade that I took personally, but we had a -1R, and then we had a entry which resulted in a 3R. So, admittedly, that was a loss, but we had a 300 odd pip result. Okay, so that would go in as a loss, so it'd be a -1R, just theoretically. So that would be the GU. Yeah, you get the idea. And then when we re-entered, it was a long, and then it was a plus 3R. You can put the plus in front, but it's up to you. You don't have to. And then the next column is points, so like how many pips you got. So that was a 300 plus. That was a minus 100. I think it's minus 115 off the top of my head. And then success, and that was it really. So what it does, it just keeps you on top of your finances basically, and you can go back on this and then see what worked and what didn't. Now I've got my physical diary which I can flip back on. I think, oh, that probably wasn't that good a strategy. How can I develop that? And one of the problems that I had this year was not really knowing where to put the stop. And so you can be a bit lenient on the stop, but then of course it does then incur like a loss. You definitely don't really want to be moving your stops. Now with this better volume setup, you have a static stop loss. It's because it's based on that candle wick. All right, so you don't move your stop. That's where your stop is. Admittedly, we had a loss, but you know, we enter the wick high, up we come. Okay, and that's that. So this is a quick video in the trading journal. I'm very old school, and I've got a pen and paper, and I just go through my diary each day. And like I say, I don't trade every single day. Yesterday I didn't have any at all. I was looking at scalping on the dollar yen, but just on my demo, because I'm just testing this better volumes, and it was really profitable last night using the 1 minute analysis, which is something that I probably wouldn't recommend because we still need to be doing lots of testing. Maybe I'll show you what I mean actually. Go to the time frames, time study, time frames. 1 minute, I'll show you. This is slightly annoying sometimes. God, yeah, the auto scroll. It's quite annoying actually. Why you can't just manually do it. Now let's have a look. What I was looking at. This is the close. Lots of horrible algo nonsense there. And where are we? What time is this? Yeah. So right. So what's happening? That we're creating lots of bullish candles, right, on the better volumes. So we map that particular candle, and then we buy above. Okay, and that's how I was doing the 1 minute scalps, with a stop there and a buy there, and then again, you know, we had a buy. We got like nearly a 1R, definitely got a 2R, and you get the idea anyway. So that's a quick one on the strategy that we're currently looking at, just testing, and that's it. So just put in your pair, your size. That size is according to your account size, and your position, long or short. You could maybe do a hedge trade, but the only trouble with hedging, it does complicate matters a little bit, and it can be a bit stressful. It's all right if you know what you're doing. The date is obviously very simple. So the conviction is how confident you are. I'm very rarely got high conviction because that's just me as a character. I'm quite conservative, even down to how I spend my money. You know, I don't really buy extravagant things. So that's just my personality. Strategy used, that could be better volumes, or it could be the FXCM crossover, or it could be ratios and SLC. It's up to you what you want to do. Your risk reward, that should be quite simple. You know, where your entry was to your stop loss. Did you get stopped out? Yeah, if you did, it's a minus 1R. If it was a successful trade, then you can put 1R, 2R, 3R, or even a 5R like we did in the Euro USD on the 15 minute. So a bit more testing on this particular strategy that we're using, and that's it. So just a quick one there, and it's a good thing to do, having a journal, because you know it gives you like a backbone, like a structure, and obviously you use this with your plan. And with the trading plan, it tells you what you're going to be doing for the day ahead. And that's really, really important that we've got a plan. So when we get to P, it will definitely be on trading plan. And it's really, really important that you guys have got that even just so you can refer back to it and you go, all right, okay, and it keeps you in check. Because if you haven't got a plan, what are you gonna do for the day ahead? And so, it's really important. The journal is just like a backlog of what worked and what didn't. And for me personally, it was not knowing where the stop loss was, and this is where this strategy can really help. So that's it. So hopefully it's helpful. And if you're old school like me, just buy a diary and just fill it in every day. It doesn't need to be like overly complicated. Just keep those columns nice and simple, and then you can populate it as you go. It doesn't take like 1 minute to do. It's really a good idea, in my opinion. I'll speak to you guys soon, and have a good day.